Morning everyone, just wanted to give you a quick update on what's happening out there in buyer's agent world. Overnight the news came out that one of the larger national buyer's agent companies, Atlas Property Group, has gone into liquidation. Effectively there's clients that are sitting out there stranded, potentially lost their money, will probably not get any refund as such, and probably won't get a property acquisition completed by that particular company, which is extremely disappointing. And I suppose it's a situation that's it's the second time it's happened from a larger company. Firstly Dashdot, now Atlas, and haven't really dealt with any of those or either of those companies personally, don't know them, and don't know their operations, but one can only clearly say that both have been in the industry 5-6 years maximum. So one, that's not a red flag, but yeah, time in the industry is definitely important when you're looking at acquiring people on your team. And yeah, look, I'll say it how it is. The industry in general is going through a hard period. Builders, developers are going under. There's obviously a lot of mortgage brokers, especially if you've just come up and commenced your business in the last 3 or 4 years. They are suffering, and a lot of them are leaving the industry. Real estate agents are struggling. It's an interesting period, and some might say, well, a lot of that was brought on by the government. Yeah, I don't think that you can wholly and solely blame the government, even though I don't agree with what happened in the May budget for the industry. I don't think it's a good thing, and I'll go on about that in a minute. But generally speaking, when you're running a business, you've got to have buffers in place, just like you do when you're buying a property. So if you've overcommitted on loans, if you've got the wrong structures, if you've overcommitted in terms of outlay, whether it be employees or infrastructure or marketing and advertising, then you need to have a lot of things go your way. So I suppose wanted to jump on and just for a number of reasons, just alert you to the news if you weren't aware, but also say, well, like, our business is strong and safe and in a comfortable position. There's no debts attached. Our overheads aren't massive. We haven't gone at a bull at a gate in the last 5 years and tried to take on 1,000 clients and be the biggest marketing company the world's ever seen. So we'll be okay. We'll continue to service our clients on an ongoing basis. If there ever came a time where it's like, okay, we're shutting the doors, our existing clients will get served and they will purchase property with us. So that's but obviously not our intention, and we'll be here for years to come. So wanted to give our clients that comfort first and foremost. What's the industry doing? What's the markets doing? Look, I honestly, and I'm not naive when I say this, I think this is one of the better times for investors to take action, because the flaky investors just aren't here right now. They're leaving the market. They're sitting around to see what will play out in the next 12 months. Well, I can tell you what's going to play out in the next 12 months. With the lack of investors, rents are going to skyrocket. Now, someone said yesterday, NAB, or someone said like 30% increases in rents. Whilst that sounds large, that's not out of the realms of possibility. That we're already seeing rents increase, like renewals, $50, $60, $70 increases in a 12-month period. So all of a sudden, a $50 increase, $2,500 a year in increased revenue for you as a landlord, your holding costs become less and less each year. So couple that with buying sub-$1 million properties where the yields are probably already, well, I know they are 4 to 4.5% on an average, depending on the location. As soon as that jumps up to over 5% on purchase price or on loan, you quickly get into or close to a neutral cash flow position, especially if you're putting cash down as a deposit. So yeah, I think the industry's or the market is a great time to be able to take action. Not to mention the capital growth potential. Fundamentals, as I've said, the last 12 months, they're not changing. The supply is low and the demand, whilst it's come off the boil a little bit, the demand is always still going to be there for real estate. People need a roof over their head. Let's think about the logics of real estate. We don't need to buy a share. We don't need to invest in gold. We don't need to invest in Bitcoin. Real estate, residential real estate, is a very different beast. We need a roof over our head, whether to rent or to own, and it still is the great Aussie dream. So I think we just need to get back to basics, because all we're seeing at the minute is market headlines. We're seeing doom and gloom. We're seeing Sydney and Melbourne prices plummet, right, as the headlines say. Melbourne's not plummeting. Sub $1 million. The markets in Melbourne, middle ring suburbs, for good stock are still on the increase. Stock is moving extremely quick there. Yes, outlying suburbs, western suburbs of Melbourne, and oversupplied apartments in a city, yeah, they're struggling. They're retracting, as they always have been. So that is bringing down the average, and it's also taking the pundits and saying, right, Melbourne's stuffed. So you've got the devil is always in the detail, and when and I'm on a bit of a Melbourne rampage at the minute, but it's the 6th most expensive capital city. Let's think about that for a minute. It's the largest capital city by population, and it's the 6th most expensive. So yeah, read between the lines on that. Adelaide's more expensive. I think Adelaide's going to have more of a downturn than Melbourne will. And yeah, we do strong research around the locations that we should and shouldn't be investing in, and we stay away from high volatile markets. We stay away from non-appealing dwelling types, right? 1 bedrooms. We'll never buy a 1 bedroom. We'll never buy a studio apartment. We'll never buy in a high-rise apartment block. We'll never buy on a busy road. So just the fundamentals of real estate, having been a property investor for 25 years, that the fundamentals are still the fundamentals. Yes, the markets can change and interest rates will change and government policies change, but when it's all said and done, we get back to the basics of real estate. And that's where I think people can lose sight of that. But a little bit like COVID, I think we wake up in 12 months and there'll be a lot of potential investors, first home buyers, upgraders, downsizers, whatever it may be. They'll be sitting there saying, gee, I wish I had the courage to take some action. So yeah, anyway, whilst this started as unfortunate news for the industry, another large buyer's agent company goes down the drain, our thoughts are with obviously the clients, in the hope that they can sort of see their way through this. But yeah, just wanted to give our clients and our database the reassurance that we're not going anywhere. It's not all doom and gloom in the industry. It's not every 5 minutes businesses are shutting down. But if you need coaching, if you need education, if you need someone to outsource to go and find your property, design your strategy, we're still here for you, and we continue to be going forward. So if you want a quick chat around this, more than happy. I'll drop a link below, and you can book a chat with me at any stage. Ciao.